Hello, my name is J. Robert Eckley. I'm a real estate and agency attorney, and I've been asked today by your instructor to come in and give you a few pieces of information that I think might fit right in the middle of the session he's giving today. And I guess he'd much rather have it from a lawyer than himself so that there's someone to blame in the event that it sounds a little bit negative. But you know, the role of all lawyers is to sound a little bit negative. And the reason, of course, is that if they just went around telling everybody to have a good day, where would the profit be on this? No, lawyers are here to find the problems and to take little minnows and turning them up into whales. Now the difference is, are they working for you, trying to take the whales and turn them into minnows as a defense lawyer, or are they the plaintiff's lawyer and they're taking those minnows and turning them into whales? These are the things we want you to avoid. That's the other side. Now I want to talk to you today about how to get out of their clutches, and here's a couple of points. We're talking now about allowing your client to know the full impact of going through a short sale as a short sale seller. And everything that you say orally, as you realize under California law, will mean absolutely nothing. Unless it's in writing, it means absolutely nothing, and in most cases it even violates MR, and several other rules, which I think your instructor will probably talk about today. I will touch on briefly. So remember, all of the things that you say to your client are not worth the paper they're not written on. Everything must be in writing. In fact, you can even be sanctioned for giving important advice to your client without putting it in writing. The DRE frowns very heavily on that, and of course most case law does out there too if we're starting to talk about malpractice, which is the potential out there even on these short sales. And do remember, NAR has identified the 7 most likely areas of practice to generate malpractice claims, and the very top is short sale misadvice. We do have a duty to properly advise our client. And remember, not just on the nature of what a short sale is, but what's going to happen to them after the short sale. It's a status change, and they need to know adequately what their status change is going to be. Such things as bad credit, the potential to suffer taxation, the difficulty maybe of finding other lodging due to an adverse credit report. These are things that they need to know about. And it looks as though, from the standpoint of all the federal and the state regulation on this, we're the ones that are going to have to tell them. Tell them in what? Writing. So, although I'm not going to be exhaustive, I wanted to give you a couple of the high points on what those writings should contain. And by the way, if you have need for such a writing and you are not using the ones that are provided by CAR or some of the other agencies, or you find them to be inadequate, you may log on to Eckley, E-C-K-L-E-Y, at eckleylaw.com and send me an email and tell me that you would like to have our free short sale disclosure. We will be glad to mail it to you through email so that you have something that you can use in your daily transactions. And it pretty much covers all of this and more. But again, let's return back to this little segue about what I'm talking about generally, which is just a couple of check marks on issues you might want to think about in that short sale disclosure with your short sale seller. First of all, I've talked about that it needs to be in writing. But secondly, you need to let them know that there are other programs out there. That short sale is not the only alternative in town. What other programs am I talking about? I'm talking about HAMP2, HARP2, and do remember that they may qualify for the big mortgage settlement that was just done, which in that case, they'd have to let the lender know about because there's an application process, and through the application process, they might actually get a principal reduction to which they're eligible right now. And it may make it such that they're capable of staying in the property. So obviously that would be something you'd want them to know about, that there are in existence other programs. Now, you may make them available for those other programs through other information that you have, or you may suggest to them that they make one of the contacts that's on both the CAR website and actually the California State AG's website that says, by double-clicking, takes them to the kind of information they need to know about such things as that big bank settlement that was done for that $27 billion for which they may be qualified. And as I say, HAMP and HARP2 are both on the internet. There's hyperlinks that you can take them there. CAR has entire data packages that will tell the borrower more about those kinds of programs. Those are the things they ought to know about, that there are other options. You would hate to have them get done with this short sale, go out, and of course suffer all the things that they're going to suffer because of the short sale, and say, had I only been told about one of those programs, I would have never done it. So you want that in writing. The second thing is, you do have to remember that in some cases, these parties really should not be in a short sale. Let me give you an example. One of the things that comes to our office continuously is the short sale seller who had absolutely nothing at all. In other words, they had $100,000 in credit cards over. They had the people out there looking for their car to tow it away because they hadn't paid the mortgage on their car in 6 months. They were in terrible shape. They were virtually negative and upside down already. and then you did a short sale for them, only to have them now not even have a roof over their head, and now they're wandering up and down the street trying to rent, and all of the landlords in town are saying, I want to see a tri-merge that shows I should even rent to you. And they're ending up ultimately paying a lot more for a crummier joint than what they would have had otherwise, or they can't rent at all and they're sleeping on the park bench. I guess in that case, probably the better advice would be maybe they should have taken a bankruptcy, or maybe they should have just stayed in the house and not even done a short sale and sat there for another year free and accumulated their money. Well, what is my comment here? Is it that you have to counsel them on bankruptcy? No. But you might want to tell them that there's other legal remedies here. There's other things they may want to look into, such as, is this the right resolution for them in their debt position? Or is there a greater resolution? Perhaps they ought to seek counsel to discuss that. What kind of counsel? Attorneys, of course, obviously those guys again. And let them explain to them what their options might be and make the decision that a short sale is the best thing for them. Because in many cases, I have to tell you, when these people have no assets, it really isn't, and they're going to be told that someday. They're going to suffer and find out that they can't even get another roof over their head. So this is an important disclosure. Another item that I think, of course, is that you can't make promises you can't deliver. Mars and Myrrh also suggest that you can't take deposits up front, and you won't. It also gives you language now that you need to tell that you only get paid in the event that you're successful in the short sale, that there isn't going to be any deposits. If there's deposits for anything that later develops, those are going to be deposits related to the transaction, such as earnest money deposits with the broker to be paid over to escrow or something like that. All of these now have been defined. There are certain statutory statements that you need to make to them at the time of first contact, which probably means on your website, but could later mean in your agency disclosure, could also be in your TDS, and certainly it's going to have to be someplace in a perhaps short sale disclosure form, so that these comments, exactly as stated by the feds, and they've just published the right one, go out there and log on to Mars and find out what the new statement is, just published last month. I'm not sure when this might be shown, so I will indicate that last month means May of 2012. And those have now been published, so there's a safe harbor remark. You want to have it on there. The mortgage information rule is that if you tell them or quote them rates about other optional places, even in HAMP 2, say, or HARP 2, as to what those rates might be, those rates have to be absolutely accurate. Or if you obtain information from some other source, you have to attribute that source. Take a look at MERS. It's another one of the disclosures that needs to be out there. Also, claims on the potential for having taxable discharge of income. That's under Section 108 in the Mortgage Relief Act. Now, you know the Mortgage Relief Act is going to expire in December of this year. That's 2012. That's the federal component to the relief. And that one was the one that really helped us a lot when we had HELOCs attached to the property, or when we had loans that were taken out in order to work on the property, and then we ultimately lose it. That's the one that taxes a discharge of indebtedness. If the lender does a short sale and walks so that we don't pay another $250,000 toward the house, by the end of the year we can get a 1099 that says we've been excused of that kind of money, and that can actually lead to phantom income on which the party needs to pay taxes. Well, some note of that needs to be mentioned. But I also want to go one step further. A lot of licensees out there now are using this inappropriately. They're advertising to potential short sellers and saying, look, you've got to do this by the end of the year, because otherwise you won't qualify under the Mortgage Relief Act. Actually, that's not true. First of all, California is considering extending its own version under state law, but even then, federal law still has Section 108 of the Internal Revenue Code, which existed before the Mortgage Debt Relief Act. It exists during it, and it's going to exist well after it. And that one generally creates the same outcome, provided the party is typically insolvent at the time that the property goes back, or the property goes into foreclosure, or the property is short sold. So there's probably not going to be a phantom income in most cases in most of your short sale deals, but at least you ought to let these parties know what the general rule is and send them off to their accountant or their attorney to have this explained, or use one of the other websites out there that explains it further. But don't you sit down and be the one giving Section 108 advice or mortgage debt relief advice. That would be inappropriate. That's the rendering, of course, of tax or accounting opinions, which we are not licensed for, so we want to stay out of that and put it on the feet of those who really are the ones that are supposed to comment on that. Certainly some comment ought to be made about adverse credit afterwards. They're going to go forward. They are going to have adverse credit. In California, as it is in many states, if they've got a tenant in this property, it's not one they actually occupy, they've actually left it, and they're collecting rents, they need to be notified some way or another, if not in just a memo that's in your file as opposed to some formal short sale document, that's considered to be rent skimming if they're not paying the mortgage at the same time. Technically, all those rents belong to the lender. That's part of the assignment of rent clause in your trust deed. So taking those while simultaneously not paying the lender is a rent skimming. It's a violation of the Landlord-Tenant Act. It's sanctionable also criminally. It's certainly a sanction under our licensure because we're really engaging in stripping or wasting or confiscating money or allowing our clients to do it that would otherwise be collateral for a debt owed a third person. And as you know, in moral turpitude, we as licensees, are obligated not only not to commit any terrible crimes upon our clients and customers, but we're not permitted to commit them on anybody, whether they arise out of real estate or otherwise. We have to keep our record clean, and we have to make sure that our moral turpitude is intact. Now, these are just a few of the things that should be in your short sale notice. And these are ones that I recommend because I believe they're going to be out there constantly. They're going to be an issue, and actually NAR study group has already identified them as issues. And of course, obviously, there's one last comment that you'd want to put on this disclosure, and that is that they should see their attorney and accountant about any and all other questions they may have. Why would we put that in there? Why wouldn't we be the smart guy, the one that knows everything about it, and counsel them? Well, it's real easy. It's someone to blame. We've got to blame someone else if this thing doesn't go appropriately, right? Well, I'm actually being a little tongue-in-cheek on that, but the fact is, we should leave those who are licensed for whatever advice they're giving to those who are so licensed. And we should beg out. What we really are marketeers. We're supposed to get an honest marketing project accomplished without getting anybody in any trouble. We owe that as our fiduciary duty. We certainly owe truth and capability and competence and integrity and the ability to get the deal done. And obviously we owe full and complete disclosure. Let's not get into the gun sights of someone by virtually not giving any disclosure at all, or by trying to cover up some of the more negative elements about short selling. And then, of course, I would even add, it's just an anecdote to point this out, many times in the course of closing, the lender might even ask for some additional consideration. Now, you know California has a rule against that. They either accept the short sale or they don't. But some of these transactions actually have a deficiency judgment capability. Who's best to tell your client about the short sale deficiency or about the willingness to pay additional, maybe on the side to one of the lenders in order to have them get out of the way, like to a second? Seconds are phenomenal in asking things like this, even though state law says they're not supposed to do that. Who's to give that kind of advice? Is it you? You better put it in the hands of an attorney. And typically, they'll give them some pretty good counsel on it. They're not just deal killers. Find a good real estate and agency attorney who's done this before, and I think you're going to find yourself someone who probably looks at it the same way you do and is going to give the same advice. Now, I've said my piece for today. I certainly have not exhausted all of the potential options out there. I'm going to leave your instructor to give you the balance. Again, if you would like to see a complying disclosure, you can write me and ask me, and I'd be glad to give you one. It's free. We have them for, they do vary by state. We have them for most every state in the union. Be glad to help you with that as a way of sending you off in the right direction. And if there's any other questions, you might ask your instructor. But thank you for inviting me here today, and I'm going to turn this matter now over to your instructor. Have a good day.